Now you'll probably buy a few cars during your lifetime. Getting a bad deal on a car loan will cost you thousands and thousands of extra dollars in interest payments. It's a good idea to learn about car loans now because there's definitely better stuff you can do with all that money, I assure you. Car loans are typically arranged for a variety of terms. A term is basically how long is it going to take for you to pay your loan off. It can be anywhere from 1 year to 7 years. The longer the loan term, the lower your payments. But beware of longer term loans because sometimes they might have really negative outcomes, okay? When you're just trying to start out and you're just getting going at the beginning, try to stick to a loan term of 3 years or less. That would be my advice. Of course, having a longer term than 3 years is going to lower your payments again, but keeping that first car loan term to 3 years or less is going to prevent your first car that you buy from becoming a never-ending purchase. So that's what I would suggest, at least early on. Now let's talk a little bit about being upside down on a car loan and what that means, because this happens to a lot of folks. The worst type of car loan to be in is an upside down loan. That happens when the amount that you owe on the car loan is more than the value of the car if you wanted to sell the car. So let's say, for example, that you buy a car. Let's say you buy a $20,000 car on a 7-year term. So you agree that you're going to pay the $20,000 plus interest back within 7 years. Now let's say you're driving along, 3 years pass, okay? And now the car is worth, let's say that the car is worth $9,000, okay? Let's say you've been in an accident and there's a new model of the car that came out and all kinds of stuff that lowers the value of the car. And now the car is worth, the value of the car is $9,000, okay? But you still owe, let's say, $12,000, all right? So that means that you owe $3,000 more than the car is worth. That means you're upside down by $3,000. That's what we call an upside down loan. You owe this much, but the car is worth this much. This is how much you are negative in that loan. Now this is a pretty extreme example. A car that's $20,000 when you buy it may not go all the way down to $9,000 in 3 years, but you never know. Sometimes stuff happens. This is the stuff you need to be prepared for. So if you're in that situation, you want to buy a new car and you want to get out of this car, you're going to have to pay this $3,000 that you're short, plus come up with the down payment for the new car. So that can end up being really expensive. Many people fall into the trap of buying cars that they really can't afford on long-term loans. And again, you can avoid that by sticking to a 3-year loan or less. Okay? Now let's talk a little bit about car loan lenders and how they decide to approve you for a car loan. The first area they look at is a credit report or your credit history. We've talked about that in a previous lesson, but having a high score as you possibly can, at least a 660 score, which is like a B grade or better, that's going to lower your interest rate and save you a lot of money with lower payments because you're going to get a lower interest rate. Now, lenders also look at your income. They look at something called a debt-to-income ratio, okay? So let's talk a little bit about that. Let's write this stuff down. So, car loan lenders. The number one thing they look at is your credit. How is your credit? The number two thing they look at is your debt-to-income ratio. Okay? And what that means is how much of your income, how much of the money that you make at your job or wherever you work goes to paying other stuff, like other debts, like other credit cards, other loans that you might have. The higher that amount that is, your higher the ratio, that means you have less free money left over to pay for the car that you want to get, okay? And that's going to lower your chances of actually getting approved. You need to show a consistent and stable employment history with very little debt in order to get approved for a car loan. So stable work history and little debt, okay? So they look at that very, very closely. Now, another thing that the lenders look at is something called equity, okay? The more cash that you could put down as a down payment up front toward the value of the car, the less you're going to have to borrow to have the car. A large down payment makes qualifying for a car loan much, much easier, okay? So go to your bank, go to a credit union or some independent car lender to pre-qualify for a loan before you head to the car dealership. That's a very smart move you can make. Having your financing pre-arranged will get you a better deal and make you much more educated as a customer, okay? And definitely shop around for the best auto loan, just like you would shop around for anything else, just like you would be shopping around for the best price for a car. Make sure that your new car purchase is going to fit your budget very nicely and that you don't overspend for your car, okay? Now let's talk a little bit about what happens if you can't afford to make your car payment. So you get a car, a few months pass, a couple of years pass, everything is fine, but something happens and you cannot afford to make your car payment anymore. Needless to say, obviously it's a very painful situation to be in, and one that you can avoid up front by carefully budgeting, but stuff happens. I totally understand. If you miss a few payments on your car, several payments on your car, a few months pass and they haven't received the payment, the lender is going to connect with somebody called a repossession company. And they're also known as the repo companies or the repo man. They basically send people to take the car back right from you, right from in front of your house, okay? And it usually goes away on the back of a tow truck. So if you run out in the morning, you know, in your morning robe and you just finished breakfast and you see your car on the back of a tow truck and you haven't been making your car payments, chances are the repo man has paid you a visit, okay? It's a very embarrassing situation and one that can actually lose you a lot of money. Number one, you're going to end up losing all the money you've already paid, okay? That means the monthly payments you were able to make, you're going to lose all of that money because the repo man came and took your car. Number two, you are going to lose all of your down payment money. That money is gone, okay? So if you made a down payment up front to pay for your car, then that's going to be lost as well. And number three, your credit history is going to be damaged and you will have a lot of difficulty qualifying for a new car loan by having a repossession on your credit report. So these are three ways that you're going to end up losing a lot of money because of repossession. Don't be the person that calls the police to report a car stolen just to find out that the lender repossessed your car due to a lack of payment, okay? That's pretty embarrassing as well. Now finally, let's talk a little bit about insurance. If your car is fully paid for, your car insurance that is, if your car is fully paid for, you can legally maintain the lowest insurance limits without much issue if that's what you decide. Every state has a minimum of liability insurance that you have to carry, so check with your state, make sure that you are complying with the law as far as how much insurance you carry, okay? If you have a car loan though, the lender will require that you carry full coverage, what's known as full coverage, okay? That's because the car, it's not quite yours yet. I mean, it's still partially the lender's car. They're lending you money that you're paying back in order to have ownership of the car. But until that time, the lender has to protect itself in case the car gets stolen or damaged. Now, if you don't have insurance or you miss insurance payments, the lender is going to start charging you extra for the insurance that they put on the car to cover themselves. And that type of insurance is very, very expensive. You don't want to get into that. That's why you need to make sure that you carry the car insurance and make your insurance payments on time, okay? Having a good, clean driving record also is very important because that's also going to help get you the best insurance rates so you don't miss a beat when it comes to your car insurance, okay? Now, because you know all of this, you're going to avoid paying too much for a car. You're going to avoid getting your car repossessed and paying extra for insurance. Being responsible and being on top of stuff when it comes to your car purchase will save you a lot of money. And it's going to get you into a car that you enjoy that matches your budget. Okay? Thank you.